going to go ahead and share my presentation, and then we'll get started discussing business credit. All right, there we go. All right. So again, for those that didn't have a chance to, hear me introduce myself earlier, my name is Daniel Holliday, and what I do is help people, build their business credit profile and help them leverage, first of all, their personal credit, but also helping them leverage their EIN number. So when you think about personal credit, the main thing you want to think about is leverage. Having those additional tools in your tool belt to actually get access to capital, that's the power of leverage and also the power of what business credit can do for your business. What most people don't really realize when they're starting a business is when you actually set up that entity, they're actually going to be issuing you a Dun & Bradstreet number. If you haven't heard of Dun & Bradstreet, if not familiar with what they do, they've actually been around since the 1800s. Business credit isn't anything new. There's lots of people out there that offer it, that teach it, but there's one thing to teach it, but it's another thing when you actually have applied it and can actually do it successfully. So that's what I help business owners navigate through that process, because it can be very confusing if you're getting bad information. I've been through the process myself. I've been successful doing it, and now I'm helping people do that same thing. So again, why is business credit important? You don't want to use your personal assets to fund your business. That's the common process, the common method that people use. They get an idea to start their business. They reach out to a bank. They find out they can't get a loan. So what they do, they go to family. They try to get them to provide money to get that business going, or they just use their own resources. And that's one of the worst ways to do business, is using your own money, because eventually the money you have saved is going to run out. Jay really had a good analogy in his presentation about, the oil change and the car, and also the car versus the airplane. I was talking with Jay a couple of days ago, and, I had a similar analogy. And think about if you're taking a trip somewhere and you're driving a car and you only put 1 gallon of gas in that tank. And then every few miles, you have to stop and put another gallon of gas in that tank. It's a very ineffective way of traveling. and that's essentially what a lot of owners are doing when they're pulling money from their personal resources, their own assets. There's only so much money we have saved, and once that money is gone, it's gone. You don't get that money back. Of course, you'll make more money, but we want to protect those assets in the very beginning and never even have to use that money. So you have your EIN number, those that actually have their business entities set up. If you don't have your EIN yet, when you do get a business set up, you'll apply for that and get that number. And then once you have that number, that begins the process of building your business credit profile. I always ask this question of business owners when we're discussing credit, capital, business credit. Is your business set up to fail? Not having that business credit established, not having your profile out there for lenders to have access to, you don't have that foundation that you need in order to look professional and credible on paper as a business. You're essentially a house without a foundation. I also always share these statistics about small businesses with business owners. This is an article from fundera.com, and this is from July of 2020, last year, just about the time where, the PPP loans, all that talk was happening. And it talked about the percentage of small businesses that fail. Now, you've got 50% of small businesses that fail after 5 years in business. About 60% of small businesses in the healthcare industry survive their fifth year. About 50% of food service businesses survive their fifth year. 40% of small businesses in transportation and warehousing, they survive their fifth year. And then only about 35% of small businesses in the construction industry survive their fifth year. Now, what I thought was very alarming is only about 70% of small business owners get past that 10th year. Most small business owners are going to be failing in that 10th year in business. Now, what a shame that would be, to put all the energy, all the effort, all the blood, sweat, and tears that we put in our businesses as owners, only to fail after 10 years. That's why using your personal assets is not the way to do business. Having an established business credit profile that you can fund your business with, that's what you want to be doing. Now, just ask these questions to yourself as we're going through the presentation. Do you still use personal credit for your business? Have your personal credit scores suffered due to your business? Does your business have strong monthly cash flow? And lastly, does your business have cash reserves? Now, if you answered no to the majority of those questions, your business is at risk of failing. If you're trying to use your personal credit solely, if you're trying to use all the reserves you have from your personal assets to run your business, if your cash flow is not there, then you will not be able to survive long term. Now, here are some differences between consumer credit or personal credit and business credit. Jake did a good job of speaking about personal credit earlier, so we'll just kind of, briefly touch on these. But of course, consumer credit is going to be based around your social security number. It takes a little bit longer to build a healthy personal credit profile. And then your scores are primarily based on payment history, outstanding debts, types of credit, new credit you have established, and then your length of credit overall. Now, with business credit, you're actually utilizing your EIN number. So it's not linked to your social security number. It takes a much shorter amount of time to get that business credit profile established. And then primarily your score will be based on your payment history, meaning when they issue you an invoice or a monthly statement, are you paying that invoice on time or are you paying it late? Now, with personal credit, you have reporting agencies, you have Equifax, Experian, TransUnion. But with business credit, you have Dun & Bradstreet. You also have a business Experian platform, and you have a business Equifax platform. They have their own unique algorithms. But of course, the one that's most recognized is Dun& Bradstreet, because they're the company who issues you your DUNS number. Now, the DUNS number that you're issued, that's a free number. There's a website link that I provide to my clients to take them to that site to get their number. When you create that entity, that number is just sitting out there waiting for you to request it. Now, the scoring algorithm is much, much different than personal credit. Personal credit's up to 850, but business credit for Dun & Bradstreet, they have what you call a PayDex score. And the PayDex score ranges from 0 to 100. Of course, 100 is the best score. Then you work your way down. You know, if you're making late payments, that will impact your score. If you have a newer business that doesn't really have business credit established, your score will be a little bit lower. But you know, I've seen clients get their scores up in the 70s, 80s within 3 or 6 months if they're actually doing the work diligently. Now, this is a big deal right here. When you think about personal credit, they oftentimes will give you a grace period if you're late getting payments to them. They may, in some cases, give you up to like 30 days late to pay that bill off without really dinging your personal credit score. But that's not the case with business credit. If you pay the invoice 1 day late, they're going to notify Dun & Bradstreet that that was a late payment. It may impact your score as much as 10%. And with the scoring scale being so much narrower than personal credit, you know, you only have up to 100 is the max score. That's as high as you can go. So if you have, let's say, a 90 PayDex score and you make a couple late payments, that might take you down to 70 real fast. You know, so you definitely want to be paying your invoices on time or as early as possible. Definitely not late. Now, this is also another important factor that distinguishes business credit from personal credit. When you have personal credit, if someone wants to do an inquiry about you personally, they can't just go and pull that themselves. They have to request that from you. Oftentimes that's requested through an application with you applying with them for a credit card. You may be applying, you know, for an apartment, for an application to get that apartment, a bank loan for a personal loan. They have to request your permission to pull your personal credit scores. But that Fair Credit Reporting Act does not apply to businesses. So anyone can go out there at any time, look up your business, find your DUNS number, and find out, is this business owner paying their bills on time? And that's very important because let's say, for example, you want to partner with a company, you want to do some due diligence about that company before you start signing documents to partner up with this company. So the Fair Credit Reporting Act does not apply to businesses. They can go out there, do an inquiry on your business, see if you have any bankruptcies for your business, any outstanding judgments, or if you just, you know, plain don't, you know, pay your bills on time. So that's why it's important, first of all, to have a business credit profile, but to also have a strong business credit profile. Now, I want this to be a very interactive presentation, so I'm going to stop it right here, and I'm sure you all have lots of questions about business credit. So feel free, you know, to unmute yourself, and whatever questions you've had, myths that you've heard about business credit, feel free to ask those questions. We're here, you know, right now to discuss those questions with you all. It's not a challenge, but there's been so much misinformation out there about business credit. It's easy to get lost in the weeds, you know. So feel free to ask your questions.
Hello, Daniel.
Hey, Mr. Hawkins.
How are you doing?
Good. How you doing, sir?
Doing a great job. Doing a great job. I have a question, and it's one that I get in here all the time when we talk about business credit. We will have the company they will apply for business credit, and then the lender or the bank will come back and says, well, who's going to personally guarantee? And then they end up running the individual's personal credit. So the individual becomes confused. Are we using my business credit? Or are we using my personal credit? Because the banks always seemingly want the owner of the company to guarantee the notes.
Amazing question. That's probably one of the most common questions I hear is when it's kind of a two-part answer. So when you think about business credit, the rules change for every company as far as how they extend credit to you and under what circumstances. So for example, US Bank is much different than Capital One as far as what they expect from their business owners before they'll extend a line of credit to you. And their application process is different. So for example, there's a bank here locally, you go in there, you sit down with the lender, and it's best to ask them numerous questions before you start to apply. You first want to ask them, of course, is this application that I'm running with you all, will it be linked to my social security number? They should be able to tell you that up front. You want to ask them, will you have to PG or personally guarantee that loan? You also want to ask them, what type of business credit score do you all want to see from business owners before you actually will approve them for a loan? It's not really a one size fits all. You can go into one company, they'll have their own set of guidelines as far as their lending terms, and then a different company will have a whole different set of rules. So it's best to ask them up front. One thing I've noticed is if a company is running your social security number, you definitely want to know, will it be a soft inquiry or a hard inquiry? Because oftentimes, if they're doing a hard inquiry, they're going to link that to your social security number. Now, if they're only doing a soft pull, just for informational purposes to find out what your scores are, then that oftentimes is not linked to your social security number. But us as the business owner, it's up to us to know what situations we're getting ourselves into with lending. Money can be a good tool to use, but we want to get the financing that, of course, is most affordable, but also that will impact our personal lives the least. So even with vehicle loans, some dealerships will link that to your social security number. Others won't, but you want to ask them up front, what are their terms? I hope that answered the question, thoroughly.
Yes, it did. Thank you, Daniel.
No problem, sir. Did any? Yes.
I would even add to that.
Go ahead.
And link it with the personal as well. Earlier when I said I consider myself to be J. Allen Incorporated, I say that from a mindset standpoint, because even as a consumer, if you're going to buy a house, you're actually in partnership with that bank. You have the right to ask as many questions as you want to before you sign anything. You want to understand their credit conditions, because each lender has a different set of a different level of what we call risk tolerance.
Right.
So it means that their level of risk that they're willing to take on is different, and it's different across each bank. If you come to my company, my full-time company that I work for, we may have a lower risk tolerance than a Bank of America based on the kind of lending that we do and the type of collateral that we lend against, versus maybe a Wells Fargo or someone else. in a similar industry. So it's important to be informed and be the CEO of your life and of your business. And that's what I highly encourage my clients and people I speak to them. Be the CEO. And being the CEO means being highly informed. And it also means being able to make the decisions and hire and fire as you see necessary, because that's your ship to run. The relationship is yours to run and to manage. And once if you ruin that by not asking proper questions, if you mess around and get inquiries in your report that you don't want on there because you didn't inquire up front, it's kind of going to be on you. Then you got to call me to have them removed, hopefully. So this is about being proactive. You don't start exercising after you get high blood pressure. We want to be prepared in advance, and that's why Daniel and I, and Mr. Hawkins as well, we haven't met in person yet, but I can already tell that he's a person about helping people be proactive and be empowered. So I'll lend my services and conversation to anyone that wants to just talk about it. We can put together a free call just to ask questions on anything that you want to talk about, credit related as well. So this is what I love to do. So that's win.
And also keep in mind when you're thinking about both personal credit and business credit, you have the 5 C's of credit. And whether you're looking at your personal credit or business, they care about all of those things to a certain extent. So you have, how much capital do you have saved? Do you have any collateral? What is your character, as a business owner? Do you have the capacity to actually pay them back how much you're requesting in funds? And then finally, just conditions. Those can be extenuating circumstances that, for example, I was able to get a line of credit for my business in the business name, not linked in any way to my social security number, just from a banking relationship. I met this, senior VP at a credit conference. And then, we sat down and talked about, what are your requirements for a line of credit? They were able to explain it to me quickly, and then just as they said, when I got the access to the money, it was not linked in any way to my social security number. So banking relationships are very important as well. That's the moral of the story. You need to have banking relationships with people, more than one as well, because different banks lend for different stuff. You might be trying to get a bank loan for your business from a bank that doesn't really specialize in small business loans, so you're just wasting your time if you're trying to apply for a loan for your business with them. You have to be knowledgeable about what you're applying for and what they offer as well.
Jay and Daniel, one of the things that I often see is that, often when businesses are in need of cash, sometimes it's a desperate situation. So they don't ask these types of questions. They go in with the hope that the business or the lender will lend them the amount of money that they need. And they don't take the time to say, what's your risk tolerance? Are you going to be using my payday score? Are you going to be using my social security number? Most of the time, folks are just there saying, I need money. And unfortunately, sometimes that brings on a bad loan.
Mm-hmm.
I've seen investors give businesses money that absolutely does not allow the business to grow. There are such things as bad loans. And sometimes business owners don't realize that. They just say, I need the money. One of the things that we hope to never do is that to lend you money, and then 90 days you wish you never got involved with that loan. At that point, it's a bad loan. And that's why I think being proactive, like what these gentlemen are explaining now, and asking those questions in advance will really help you, because the loan is there to help you to advance your business.
That's a great point.
You have the right to ask those questions. Don't just go in and accept anything that a lender is willing to give you. You have options.
It's much like getting like a bad payday loan or a bad car loan, on those used car lots, not asking the questions that you need to ask. They say, $1 down, drive off the lot, and then you're paying that car loan for 15 years. You want to be knowledgeable about the loan terms, not just the amount of money you're getting access to when you apply for capital. Were there any additional questions? We've got about 5 minutes left, but feel free to ask questions if you still have questions you've been wanting to ask.
Before we disconnect here, I'd like to thank Daniel Holiday and Jay Allen for their time today, and for all of you all that have chosen to participate in this Zoom call. I'd like to thank you as well. We do appreciate your time.
And we definitely appreciate your time, Jay and Mr. Hawkins as well. We're here to help you all build your business. So if you have questions, feel free to reach out to us. I'll make sure that Mr. Hawkins has my contact information, as well as Jay's information to pass on if you weren't able to get that written down at the end of our presentations. But I appreciate you all's time, definitely, because I know the time it takes to run a business and the time that you have to sacrifice for meetings, so I appreciate you all, and we look forward to helping you all.